Large part of Singapore's fintech success came from B2B fintech. Of the $4 billion number I quoted, large part of the fintechs are in the business of helping banks to digitize. And that's the secret sauce we got into, that we told our banks, work with them.
And I think, and that's true. So whichever ecosystem realized that the operative word is and,
Yes.
not or,
Yes.
I think has got that story right.
Absolutely.
Right?
And that B2B partnership is the key. It all started from day one. We had this strong belief there are three ways to do it. You have to build your capacity, you have to enhance your capability, and you have to have capital behind it. We start the year about inclusive fintechs. Then we go to the policy challenges, and we end in November the big macro topics. And that's how this whole thing is being thought through.
I want to welcome you to the second season of Couchonomics with Arjun. Join us this season as we go beyond fintech and payments and embark on the journey into the future of financial services, a future which will be shaped by existing and new developments in technology and innovation, including and not limited to the likes of embedded finance, open banking, ESG, various versions of metaverse, decentralized finance, digital currencies, and other trends. On the couch, we're going to have the most influential and progressive-minded founders, executives, investors, regulators, innovators, and industry commentators from across the MENA region and beyond. Join us as we unravel a multitude of layers of the financial services industry and try to learn how technology will continue to impact the world that we live in. Couchonomics with Arjun is proud to collaborate with some of the most respected and innovative names in the world of payments, fintech, and technology. Arjun is a reliable end-to-end payment solution that provides innovation and flexibility to help businesses achieve their ambition faster by turning payments into a strategic growth driver. Get everything you need with 2U, a Saudi-based super app for delivery, mobility, on-demand services, and a lot more. 2U connects you to everything you need to enrich your daily lives by building an ecosystem across its end consumers, merchants, and reps. Visa is a world leader in digital payments with a mission to connect the world through the most innovative, convenient, reliable, and secure payments network to enable individuals, businesses, and economies to thrive. GDA is a leading fintech and payment solution provider founded in Saudi Arabia, expanding rapidly across the region with established operations in UAE and Egypt. GDA's vision is to empower merchants with the tools to start, manage, and grow their business. M2P pioneers next-gen fintech through innovative offerings across payments, lending, and banking landscapes. Their comprehensive tech stack powers end-to-end banking services, BNPL, customized credit cards, prepaid cards, and more.
Welcome to today's episode of Couchonomics with Arjun. I'm your host, Arjun, and I think today is a special episode, and we've mustered it together in literally no time. Joining me on the couch is Sopnendu Mohanty, who's the Chief FinTech Officer of Monetary Authority of Singapore, which is the Central Bank of Singapore. But before I get to Sopnendu and welcome him to the studio on the couch, I do have to thank Sanjeev Purushottam, who actually helped me pull this together, because Sopnendu was in the UAE for a short official trip. And when Sanjeev mentioned it, I said, hey, could I possibly have SOPs? And that's what I'm going to refer Sopnendu to for the rest of the show on the couch. And he said, let me see if I can pull it together. So thanks a lot, Sanjeev. With that, Sopnendu, welcome.
Thanks, Arjun, having me.
No, it's a pleasure. And actually, it's a great pleasure because I've been attending your Singapore FinTech Festival, which was kind of built and created by you. We'll get to that later. For the last, I think, 6 to 7 years, and I still think it's one of the best sort of FinTech events which happens globally. So we have. I know you're a busy guy. I know you have back-to-back meetings. I really appreciate you taking our time. So over the next 45 minutes, we're going to run a fairly efficient podcast. And I think as a regulator, you'll find it easy because your answers are going to be quite precise. Let me first start with very, very simple, basic question. What is your job?
Okay. Well, as the name suggests, Chief FinTech Officer, and people sometimes think I'm kind of promoting FinTech, but I have quite a expansive job by definition, not by definition, more by strategy. I look after a whole set of policy choices we make when it involves technology affecting financial services in terms of business model, in terms of how it's going to reimagine that whole services. So that's one part of my job. The second part of my job is to think about what are the future public infrastructure we need to build so that the future services going to run on those new infrastructure, whether there's a new payment infrastructure, new data infrastructure. So, and it includes both domestic and international in terms of connectivity perspective also. And the third part is what people in a popular sense see me as doing, promoting the startup culture and promoting the ecosystem, developing a much broader integrated founders, investors, startups all coming together, making good change to our society and make it more inclusive. So that's the third part, which seems to be much more visible to the people. But I do a lot of standard, boring public policy job behind the scene.
Well, I don't think there's anything boring in your job, as in, I would imagine it's one of the most sought after jobs in the world, if not in Singapore. But let me ask you a very elementary question, right? Obviously, these three things are very wide in their coverage. So how do you measure success for yourself?
Well, when you think about success in this particular space, one good thing about is that it's not that hard if you think what you're trying to achieve. The very genesis behind fintech, why they actually came to this, if you think of the word itself, there are a bunch of people who came from financial services were not happy the way things were running. They want to make it better. So there are a bunch of people who went into the space hoping to make the financial sector a better, more delightful sector in terms of consumer services, in terms of product offering. Then there's a second bunch of people who felt there are huge segment of population who have whole set of unmet financial need. And that's the financial inclusion, we call it. So that's the second bucket of people who wanted to do that. And in terms of success, if we could get both of them do what they want to do, and we measure the success from that lens. Now, in terms of numbers and metrics, there are many ways to cut it. If I look back to the Singapore ecosystem, and just top of my mind, you think about the payment infrastructure. In Singapore, there's something called Pay Now, become very popular. Especially during COVID, it becomes almost a necessary infrastructure. And that payment infrastructure was built around this notion of simplicity, inclusive, and as a way people can move money in the most efficient way. 3 clicks, 0 cost, just knowing your mobile phone number is good enough. That's one way to look at how success can be measured in this space. Other way to look at it is also like, okay, great domestic platform, so what? There are a lot of migrant workers in Singapore who are sending money back home. Is there something for them? So we connected Pay Now to PromptPay in Thailand.
Yes.
And for every $100 they send back home, instead of paying a 15% fee, they're now paying 3%.
Wow. Okay.
Huge impact to those people. We just recently connected our Pay Now to India's UPI rail. And that's also huge success because the standard we have to achieve, India's highly successful UPI rails, connecting to the Pay Now of Singapore, does demonstrate a global template of how payment system can be connected, and also have an inclusion agenda serving a whole set of people who are sending money back home, and there are other benefits which comes with that. That is infrastructure as a success matrix. In terms of numbers, if you're a businessman, if you want to use number as an yardstick, the one number we use, like the fintech investment itself, in 2015, 2016, Singapore inward fintech investment was around $20 million, hardly any number. Last year, we clocked annually 4.2 billion.
I read that this morning. Right?
So you think about it. Think about it, that shift, that jump. That's other way to look at the metrics, that how fintech has become successful as a very mainstream force in transforming financial services.
Fair enough. So let's go a bit deeper on that, right?
Yeah.
So obviously Singapore is positioned as one of the sort of leading global hub for fintechs, right? But in your words, right, what are sort of the unique differentiators that Singapore has built on, right? Which is allowed this exponential jump of inward capital, obviously number of fintechs, both which have either homegrown or come overseas,
Yes.
right? What's the secret sauce out here?
Sure. Well, there's no secret sauce in this whole success, but we have been quite open about how we go about doing things. Top of my mind, I think there are a few things which come to me in terms of how did we go about. One thing I would say, the risk of being pompous, is that we started this concept of that we may not know everything about this space. So how about creating a way by which we create a public project, a public program for any topic you pick, and then build a partnership model with the private players and drive a game-changing idea. If you look at last 5-6 years, you take Project Ubin, which is a public-private program thinking about digital currencies. If you think about small and medium business, digitizing them, getting them better access to global market, we created a program called Business Sans Border. If you think about allowing fintechs and banks to collaborate, we created a program called API Exchange. If you look at each of them, it is a way we approach this topic that we don't want to create an idea which we believe in it. It has to be a community driven, it has to be collaborative, and the industry has to self-validate the value of that program. So that's one, if you want to call secret sauces, this is one of the way to think about how to make a particular center a vibrant fintech center. The other one is, which I think is the hard part of this whole job, is to really demonstrate a real change. Things like putting back to the pay now question, that you have to have this ability to start an idea, go about bringing the stakeholders together, implement it. Implementation of an idea, it may sound very simple, but to get it done, deliver to the value it's supposed to.
It's the hardest thing.
Yeah, so that's the one. So you got to get and do implementation of whatever ideas you want to pursue. And the third one, if I have to stretch, is that this whole openness, that one of the challenges fintechs were facing, they were quite scared of talking to public policy folks. They were kind of not sure to engage with them. We created that environment where any startup, any founder, anybody from the ecosystem can walk up to us and have the dialogue. And we created a very vibrant FinTech association in Singapore, where all the stakeholders who play a role could come together, have that open dialogue. In fact, I get criticized. In fact, we had the first WhatsApp group where both us as regulators and the ecosystem had a common chat group. We could discuss openly a lot of issues which they perceive and where I have to respond to. So having that open dialogue, open conversation, not to have this wall between the two parties, perhaps is the third reason why Singapore could make it to some amount of success.
So I love this idea of having the WhatsApp group as a starter.
Yeah, the FinTech Chopal, we call it FinTech Chopal.
Right. So actually, to be honest with you, and this is not a plug for something, but a handful of us here in the UAE have actually created a group which has actually got 560 individuals who are either founders, bankers, a few regulators.
Yes.
The regulators are quiet,
Yeah.
right, currently. I think they're more observers.
Yes.
Most of them who've joined have told me that they've joined the group, but they don't. But I can actually see that sort of free-flowing conversation, I think, takes away the inhibition.
And my belief comes from that, and this is perhaps a plug for my FinTech ecosystem, nothing to beyond Singapore. The founders who are promoting FinTech have this public good in mind. They want to fix something.
Yeah, totally.
And if that principle is true, I'm okay to have that open conversation that they're all trying to fix something which is good for the society.
Yeah, so I sort of use this frame of sentence, which actually comes from Kennedy, right? So he used government, but I use the word community. It's community for the people, by the people, from the people, right?
Sure.
And I think that's the whole concept. So I think if people come with a predominantly selfless agenda,
Yes.
right, and they come together, I do think great things can happen.
And it's okay to have a financial interest, but if the core values is that I want to fix and make it better, be it. And I think that's the core strength why regulators in this space were far more open now to engage openly.
So let me ask you this question, right? So being open, being progressive is all well and good, right? And I think we should. How do you balance that, right, with stability and security of the financial services industry?
Very good question, Arjun. I think there are. This is where maybe the fourth reason why a hub can be successful if they get it right is that balance. We have certain non-negotiable contract in this engagement from a regulatory standpoint. For example, we're absolutely, you cannot negotiate AML KYC rules to be compromised for the sake of consumer experience. We're absolutely clear that consumer protection is paramount to everything. Whatever you build as a product, consumer protection is something we will enforce if there's a need. And the third, purely on the, not on the regulator side, but more on the infrastructure side, cybersecurity. Other example, non-negotiable contracts. So there are some hard principles which we don't compromise. We ensure they are implemented, adhered to. In fact, I was explaining today over a lunch, there are this 4 stack of regulatory construct. Every fintech has to think through that process. First and foremost, KYC, AML, sanctions, the almost like grounding of a good fintech. Second comes consumer protection. Third comes market conduct. You don't want to be a situation where the players are demonstrating bad conduct. Fourth, financial stability, the market stability. And fifth, the overarching broader ecosystem. Is it a public interest, whatever you are doing? It should not be something which is against the public interest. So when you think on those lenses and you want your regulation to play around, will be designed around that whole thing, we should be okay. And also just to square the discussion here, that I strongly believed from the day one, it has to be regulated. It is not a thing that you come and play because, and there's no regulation is required. And we have been very clear in that. If you're taking deposits, there are certain regulations you have to follow. If you are doing a financial activity and that activity is related to financial services, we will regulate for that activity, all the activity-based regulation. So we are also redesigned the regulatory framework. And the best example, which I would recommend your viewers to go and read, is the Payment Service Act. Mm-hmm. Think about that particular regulation in 2015 and how it changed 3 years or 4 years later, that it broke into 7 distinct modular activity-based regulation. Is a clear demonstration of how regulatory response was created to have that balance, so that you are regulating for an activity and risk proportion in that thinking.
And I'm assuming this evolution, right, or this progressiveness is actually a two-way street, correct? One is about constantly engaging with the industry and I guess the wider ecosystem, listening to them. I'm assuming it's also about looking at what's happening in the other parts of the world.
Absolutely.
Right? And I think there's to an element of it also not second guessing, but actually questioning what exists, the status quo. Because one of the things I've actually seen with regulators globally, I think they struggle with the third one, right? It's their ability to actually honestly question the status quo, which doesn't usually happen. So in your case,
Arjun, when I heard about it before I joined,
right,
and I looked at it in a very objective way. Let's break that question to 3 parts. The first question I asked to myself, that does existing financial services are designed for consumer? Regulation is not a reason why financial services are poorly delivered. Let me be very clear on that. That's something industry had to pick up. They've designed the best possible consumer experience. The banks did not spend a lot of money in designing a great consumer experience. It was the fintech who came and showed how a consumer experience looks like in a digital world. So when you talk about consumer experience, there was this myth that the regulation was a barrier to that. So that's one thing I want to just get it out of the way. It was that inertia that we don't have to do is where the issue was. I think from a regulatory standpoint, not from a regulatory, from a policy standpoint, we champion the cause for great consumer experience. And if there are policy barrier, if there is something out there which we can rationalize, we will rationalize. One example I can cite, in Singapore, we had a fabulous infrastructure called MyInfo. Mm-hmm. It's the national infrastructure for digital ID and trusted data about yourself. Yeah. We actually facilitated the whole discussion around, instead of people walking to a branch with a bunch of documents about who you are, can they just plug into an API to a national infrastructure and do an instant eKYC? Mm-hmm. this is where a policy input was or policy intervention was made to allow that experience to get better. So there are some role policymakers can play, but by and large, banks can themselves do it better, and fintech played a big role in creating that necessity in terms of shifting that thinking. The second bucket I will plug in is is there any barrier to do things differently? Status quo, for example, distribution of financial product. It was heavily paper process. It was very onerous process in terms of how you buy and sell product. In some cases, we have to really rationalize some of this thinking, allow this institution to actually deliver products online if that's a way to go for. And similarly, there are other interventions you do make, but my experience has been that fintech's biggest contribution is to force all our regulatory institutions to think consumer first, consumer protection as the starting point of any product design. And I think that shift we saw. And when regulators are willing to step up and appreciate the role of an API, role of a cloud-based infrastructure, role of a mobile-first thinking, it created that value system. So all kind of fell through that.
Yeah, but okay, so Sobs, I have a question for you here, and this is where I struggle, right? Why can't banks be customer first? At the end of the day, they have all the talent in the world.
Sure.
Some of them have technology and IT budgets which would dwarf, hundreds of fintechs.
Very good question.
Put together, right? At the end of the day, similar type of people, right? They have also chief digital officers and chief IT officers. Is it that banks? So let me rephrase that, right? That question. A lot of people actually say banks exist because of regulators, not because of consumers, right? I think there is an element of truth in that. Okay. Yes. The second lot of people, in extension, say banks wake up in the morning worrying about regulation,
yes,
and then start to worry about customer,
yes,
right? The same thought carries on. Banks are built in a manner that are, from a perspective, regulatorily compliant. Having said that, we see more bank failures than we can actually count in the days a week these days. And so therefore, the way these banks are built, they're not conducive to be customer friendly, right? Why?
Well, I could have shared the same thought if I was not working in this job for the last 6-7 years. If you think deeply about this question you just asked, if you are consumer first, you are thinking of consumer protection, you want to ensure that no bad actor come to your system.
Sure.
Why that should be a issue for banks to deliver the right experience
or a bad experience? But that's my point.
So there's nothing regulatory here. It is an expectation. We as a regulator expect banks to think about consumer first. That is the primary. You have to think that's the primary reason why we exist. To protection of consumer, the deposits, the market stability, the ecosystem. That's our existence. We are not here to make things difficult for consumers. We are here to help the consumer to have the best experience. Now, I think the real issue was how do you deliver this expectation? One way you can checkbox regulatory expectation. Other ways to think about what is the best way to deliver a consumer experience. And large part of that comes from today a technology innovation. For whatever good reason may be, fintechs figured out they have a way to deliver that experience using same technology in a better way. And I was also today discussing with few folks today that banks were quite scared to outsource this technology IP to smaller companies who had a better idea. They're typically comfortable with large tech vendors do the same.
Yeah, because they're worried about failure.
Yeah, so right? They're comfortable with the idea. So I think what has happened now, banks are more comfortable now, at least in Singapore ecosystem, to actually experiment and partner with small fintech companies. Large part of Singapore's fintech success came from B2B fintech. Of the $4 billion number I quoted, large part of the fintechs are in the business of helping banks to digitize. And that's the secret sauce we got into, that we told our banks, work with them.
And I think, and that's true. So whichever ecosystem realized that the operative word is and,
yes,
not or,
yes,
I think has got that story right.
Absolutely,
right?
And that B2B partnership is the key.
And this is not about what Arjun is a fan of, but I'm a big fan of B2B fintech or B2B infrastructure plays.
Yes.
And I don't care if it's an old world company or a new world company. It's basically how the consumer is delivered. But let me ask a question.
So, sorry, Arjun, I just want to tell your viewers that there was a policy intervention required.
Well, I was going to ask you that question, but go ahead.
Yeah, so because that's critical, because it's not a simple, okay, why don't you do it? There is a bit of policy thinking required about how does bank treat outsourcing guidelines, keeping in mind these are small companies, they're just 2-year-old, 3-year-old company. There's this element of risk.
There is,
right?
Yeah.
So how do you balance that? And does your local regulation allows that to happen? Because you may have a risk of failure. And so I think there was a deep need for us in Singapore to really think through that journey, that how do you bring these experiments to discussion? So we created a platform called API Exchange.
Yes.
And that platform was designed and sponsored by MAS and World Bank and few other public institutions to create a safe environment by which fintechs and bank can collaborate, experiment, have the trust relationship, then have a commercial contract behind it. So we had to put a public infrastructure in play to make this work. It was not a overnight switch. Start loving fintechs, have a B2B journey.
And so you've answered the question, and this was my question to you.
Yeah.
What role did you play?
So this was
right. And was there anything else?
So this is one example.
Yeah.
We started our discussion saying Singapore FinTech Festival. Mm-hmm. The one of the original intent of that program was to build that trust relationship between all the stakeholders who are going to redefine the future of finance. Whether it's the investors, whether it's the fintech, or the regulator, or bank CEOs, bank officials, we had to bring them together in the massive FinTech Festival program over 3-4 days to build that confidence, build that discussion, build that engagement. And that played a huge role in the shift of the whole shift of thinking on the partnership model, collaborative model. And that has had a long impact on this fintech ecosystem. Today, if you think about the investment climate we are in, any country which are focused on the B2B fintech continues to see a funding growth.
Agreed. Well, because those are the companies which people want
yes,
to want to invest
in. I have nothing against B2C companies.
No, nor do I.
Yeah. So there are B2C companies who are competing against banks, and they're licensed, they're regulated, and they're doing a great job.
Yeah, and they're making banks change.
Yes. So there is this
great.
competition benefit out of that. So let's be clear about that. There is a huge role for B2C company. But from a broader ecosystem perspective, as a regulator, we believed the big part of our need or surgery should be done through this B2B partnership.
No, agreed. Totally agree. And I also be very, very clear on the show. I'm not showing, there is no bias in terms of B2B versus B2C. It's just a personal preference that
yes.
I intellectually find it more intriguing.
Yeah.
To be honest, I find B2B infrastructure plays, fintech infrastructure players more fascinating and interesting. Yes. As a matter of fact, every time I am given an option to sit on the advisory board of a fintech, my preference is towards that. But that's just my own interest. I think B2C fintechs are playing an incredible role.
Yeah,
and
indeed.
actually they're playing an incredible role because in a lot of ways, they actually make the consumer aware of
yes.
what is different.
Indeed.
And what could be different.
And in fact, the big dramatic shift on the bank's insurance company consumer experience shift came from B2C company.
100%.
They showed the way, they showed how it should be simple to interact with an app. They showed how processes can be straight through. So huge contribution, no doubt about it.
Okay. So let me now ask you, I've got 3-4 questions around this whole fintech
yes.
ecosystem, right? So firstly, right, and again, it's my view, fintech largely has an element of FOMO, right? A particular type of fintech succeeds, you see 12 of them launch in 5 minutes time, right? How do you as ecosystem orchestrator, right? If I was to call your office
yes.
as an ecosystem, ensure that the not so sexy parts of fintech are also going through as much attention, as much innovation, as much disruption. How do you enable that?
So we have various policy program through our grants system. We have quite a reasonable grant structure where if a fintech, if it's not the cool ones and they have really can change the way we do things, they can partner with a bank and they come to us. We do a lot of this public funding of through 50% or depending on how the structure is. We support pilots of such
So
programs.
these are pure grants.
Pure grants.
There's no equity. There's no debt.
Pure
It's
grant.
pure grants.
Pure grant, and we look at different companies, what they're trying to solve for, and they bring a bank along with them, and we support that whole grant structures. And we have a whole series of quite a generous grant supporting a wide range of asset class.
And who funds that grant, if I may ask?
Is MAS.
So it's actually the
Central
central
money.
bank itself.
So I use the word called is a regulatory signaling money, because while the amount could be small, but it is very significant from a signaling perspective.
But exactly. But doesn't that really scare away some of the other players who might want to get into the market and say, well, this particular startup has
No, it's open. It's a open regulatory sandbox framework. People, it's a fair process. People come with their partner to whether it's a bank or an insurance company, and they apply. So it's a very open process, and we don't actually, in principle, why we don't fund companies. We fund an idea.
Yeah.
We fund a pilot which looks interesting. It so happens a couple of companies behind is driving this outcome, and we made it level playing field, which means that if that is allowed, it is signal for everybody that they can do the same thing without any issue of regulatory.
Are those grants available to venture studios also, or not?
No, it's primarily driven for fintech companies and banks who come as a
Who are collaborating with each
collaborate.
other. Okay.
That's one part of the strategy. The second part is definitely through the innovation labs. Today, Singapore, if I'm not mistaken, has the largest concentration of innovation labs. Why? Bank's procurement process starts, if you go to traditional process, it starts with the CIO and its own organization. So we thought that one way to make it little easier is to support the innovation centers of this bank in Singapore. We have roughly, between banks and non-banks, 50 plus innovation centers which we have collaborated. MAS has contributed to that. The centers are in Singapore. They pick up projects and then they do some experiment, which later becomes part of the mainstream tech stack.
And how do you support these banks?
We support different support in the headcount support and salary support we do.
Okay.
And today we have 50 plus centers, innovation centers from different institutions. So that's second way to drive this outcome. And the third way is when we do this large projects I talked about, public-private projects, where we talk about digital currency, small businesses, ideas, and you see a lot of companies participating in the dialogue, and they become part of the narrative, and they get their own journey coming out of that. So we have this kind of tools which drive this kind of adoption, trust building, so that they really get into the mainstream for discussions.
Okay. Is attracting foreign fintechs to come set up shop in Singapore one of your metrics?
We as a financial center hub, we are one thing we're very open about global talent pool. Mm-hmm. We want to make it as open as from an ecosystem perspective to attract global talent, global companies to come into Singapore, and that has been one of our strong focus area, because ultimately this industry is not going to grow out of a domestic market. You have to imagine Singapore is just 7 million people.
Yeah.
So what can you do with that? So any company by design must have a global footprint to succeed out of Singapore. So by design, we are global. By design, our focus is multi-country. By design, we encourage companies who have a multi-country presence. So that's part of our DNA construct.
So let me ask the flip side of that. So there are lots of startups, lots of fintechs which have incubated themselves out of Singapore.
Yes.
Does your office play a role in terms of helping them internationalize themselves?
Yes, we do. We have close to 40 or 50 plus MOUs with different central banks. While we don't, there's nothing. I don't want people to mistake as a green passport or some kind of passporting. Right. But having this collaboration, it creates that kind of engagement where fintechs do go cross border and engage with those countries. Well, today, as I said, for some reason, fintechs are blessed with this core principle of they're trying to fix something good. If they are reasonably good companies, we don't see why they could not work with multi-jurisdiction from a strategy perspective. But we want to ensure that before they step out of Singapore, they have a good base to ride on. They have a good idea. Their pilots are strong. They've gone through the regulatory regime we want them to go through, almost like a regulatory.
So they've proven themselves.
Yes, so and we provide them that credible regulatory framework, so the regulatory muscle memory is well entrenched in their design thinking. So when they go to other country, they can tick off all these boxes saying that they have all the experience they need to have to be a successful company in the country.
Interesting. Let me come out towards the flip side. I think it's a topic that I've read a lot about, and I think you guys have done a great job. As fintech. Well, firstly, to me, every bank is now becoming a fintech because their technology budgets are swelling. They are using progressive technology, so on and so forth. That creates an entire challenge with the existing workforce in terms of upskilling, reskilling, right? And then, with all the new craze with AI and so on and so forth coming into the frame, that sort of upskilling, reskilling concern becomes bigger, right? What has been your sort of approach to it? And when did the journey start for you guys in terms of you identifying? Because let's be honest, lots of countries have yet not formally started addressing their upskilling, reskilling challenges. They believe that it should be left to universities or individuals themselves, but we all know that with the speed at which technology is actually entering, you can't just leave people at their own devices. They need the aids. So just from a Singapore perspective, when did the journey actually start? What are the big interventions you guys have made?
It all started from day one. We had this strong belief there are three ways to do it. You have to build your capacity, you have to enhance your capabilities, and you have to have capital behind it. So capacity and capabilities are core part of our thinking. In fact, when we make any policy approach, we look at one of the stack is skills. And think about it, 6 years back, I would rather argue saying that large part of workforce, which was part of the financial sector, were not necessarily digitally native. So we had to put a lot of effort in building multiple programs so that the existing workforce are upskilled to be able to deal with this new expectation, the new consumer expectation. So upskilling, reskilling is almost an obsession for Singapore. We are obsessed with the idea that all our workforce who are in the sector must, in some form and shape, to have to upskill themselves to deal with this new world. It can be a back office, it can be a middle office, it can be a front office, the compliance thinking, the digital, the whole financial literacy, not in the financial literacy we know, more on the digital side of the literacy. What are the risks? What are the opportunity? How we have to think differently? It has been part of a program throughout 365 days for last 4-5 years. As I said, we are obsessed with the idea that upskilling, reskilling is a key to the success of a center in the future.
And you did that with, how did you actually encourage the incumbents, the banks, to get serious about it?
There are many creative ways to do it. That when we announce...
Share one.
For example, there's something called Project Nova, which is a project which uses AI to rethink financial services. I go out and say, who are the banks willing to collaborate with me on this program? The banks will go and find talent within their workforce who will join us in this program. It creates a network effect. Then the people who join the program from the bank, they talk about it, they work with us, and they go back and they then have this network effect of upskilling themselves. So there are these multiple ways where we generate attention, we generate anxiety, that if you're not in this future tech stack or future digital thinking, you're losing out a big part of your journey. And of course, LinkedIn is a great place. So everybody, any of those people who are part of a program, the first thing that, I'm part of this mass program called Project Ubin. I'm part of the Nova program. I'm part of Greenprint. Whatever projects we do, that is as a badge of honor to be part of this multiple programs.
So you create FOMO.
And yes, and also it is a right FOMO to be out there, because you got
without doubt.
You got to show a strong signal as a regulator that we believe upskilling is the key to the success. And the workforce, if they don't see this as a strong signal, they're not incentivized to shift. Of course, there are plenty of training providers out there. We don't need to redo. We can just take it as they do today and inject them to our ecosystem. But the incentives have to be built. The anxiety has to be created. We got to be strong about our messaging that without the right skills, you have no chance in the future of financial services.
I love that idea. I think that it is a combination of all of that.
Yes.
Let's switch to one of my favorite, if I may call it, events.
Yes.
I was very fortunate to have attended quite a few of them. Unfortunately, I haven't, because of COVID, I haven't attended the one since COVID. It clashed with something else.
What was the genesis of Singapore FinTech Festival? And talk to me a little bit about how it's evolved.
Well, it's a policy journey, I would say, because there are things I would love to share in private, but I can't do it in a public space. But I'll give you a sense where in 2015, when I took this job, I was looking around how we should think about it. And part of my 6 months reflect back was that we can't just do fintech the way it was defined then. If you think about fintech in 2015, it is all about either lending or payments. That's it. That's the boundaries of fintech.
Some parts of the world, it's still that.
Yeah,
Okay,
and what it means that the only place in the world where you can do this fintech is a large market with the unbanked segment of population. And where does Singapore stand? We have no chance to make anything out of it because we are a highly banked country. People have account, reasonably good financial services, payment system does work efficiently. So I had this almost like a blank space. What should I do now? So we created this program. It moved from a very small, modest desire to bring some 100 people together to think about, can we rethink the definition of fintech? And that modest 100 people program, through a series of journey and through a series of partnership with very interesting people, there's a book coming out by one of our favorite person in Singapore, the director of Association of Bank, Miss Arjun. It is not about me. In that book, she actually writes the genesis of Singapore FinTech Festival, how she got into this program. And then she says to me, Sops, we got to stop this program. It is getting too much of attraction. And we ended up from 100 people ambition to 13,000 people showing up to talk about the future of finance. That is the genesis of FinTech Festival. It was a deliberate, planned thinking to build trust in the ecosystem, to build an open environment where people can exchange new ideas. And hopefully out of that gathering, we create a series of projects and products and services and some evolved policy thinking year after year. Now, one way to think today, the impact it has on the society. In Singapore, if somebody thinks about launching a project, the natural line, can we get it done before November for that year? That's the FinTech Festival second week. And it has become part of the social narrative also, that everything we do, we think about Singapore FinTech Festival. Now that's not where we ended this whole thing. Then we realized that this is generating a lot of content. And our primary aim is to democratize knowledge and give it to everybody. So we created a company called Elevandi, which is now the owner of Singapore FinTech Festival. And that company and that platform today is a knowledge platform now. It is focused on delivering this content to a wider audience, so everybody benefits out of it. So last year, we created an extension of the festival in Zurich called the 0.0 Forum.
Yes, I've heard of
and
it.
it is primarily designed to bring policymakers to do policy thinking around key areas of interest, AI, crypto, digital asset. This year, we are introducing a third leg to that. And this is something you would like to hear, that how we think about all this thing. We realized that if in the end of the year, November, if I'm picking up these big macro topics, it's quite late in the year. Now we have got a policy intervention happening in 0.0 Forum in June. So any policy conflict or issues, we can have a bigger discuss in November. We are missing out a big part of our global population. 50% of the world still don't have access to financial services.
Yep.
So they needed a forum for a proper discussion dedicated to financial inclusion, impact-making fintechs. So we created this year a new program called Inclusive FinTech Forum. We are going to host it in Kigali in June 20th to 22nd, dedicated to implementation of all the financial inclusion promise, whether it is micro savings, micro payments, micro insurance, micro pension. Even we are stretching ourselves to think about how an emerging market can also think about a capital market services. So we're building a whole set of thinking and gathering of people to only focus in this topic. Now you connect the dot. Throughout the year, we start the year about inclusive fintechs. Then we go to the policy challenges, and we end in November the big macro topics. And that's how this whole thing is being thought through.
This is very well thought through.
So that's how it's not an event per se. It is is a collective global effort to get it right.
Yeah. Just I hope they have enough hotel rooms in Kigali.
No, it's one of the. I would say to your viewers, I want people to listen to me. If Kigali is one of the best capital city I have seen of late. It's so beautiful, zero litter. It's lovely city. I mean,
I will add it on my list of cities to visit.
You must see that.
Maybe I'll come in.
Yes, you come in June.
Maybe I'll come in June
and do a podcast there.
Well,
and
that would be the icing and the cherry on the cake.
Yes.
But who knows? I think financial inclusion as a topic is critical in this part of the world,
indeed,
right?
Indeed.
In the entire region,
Yes,
right?
yes.
Whether it's the UAE or Saudi Arabia. Sops, I'm conscious of time, so I'm going to go to the last leg of questions,
Sure.
right? We're going to talk a little bit about MAS's stance, a Monetary Authority of Singapore's stance on crypto and digital assets. So, talk to us a little bit about where you guys stand on it.
I think we went through a whole journey of discovering that whole space. Today, we are in this, I would say it's still evolving, but we have a certain clarity around how we see this space evolving. One thing I just want to get out of the way, we don't see anything coming out of the private money. Absolutely, we don't see anything because it's completely, I don't know why they exist to start with. What we see clearly that the future of financial infrastructure, and this is where I must give credit to this crypto chaps because they actually created a movement of thinking differently. The whole tokenization of currency and tokenization of asset that credit must go to the crypto companies.
Agreed.
Absolutely. There's no doubt about it in mind. They actually triggered that thought. Tokenizing money, tokenizing asset, able to merge it together, creating an efficient financial system is the future of finance. What do you call it? Decentralized finance.
Yep.
Central banks today, if you look globally, BIS and central banks are doing whole set of experiment on digital wholesale currency.
Yep.
What is the outcome of that? If you have a wholesale currency, if you can tokenize the whole currency and make it part of a interbank settlement process, you dramatically reduce the cost of settlement, which happens behind all this transfer of assets and transfer of value. JP Morgan came with a big number, which clearly shows that a lot of money is being invested by just moving things from point A to point B, reconciling settlement, counterparty risk. So that's clear. That's where we'll head to in terms of progress. In terms of the form of money, there are three forms of money which will be of interest for central banks and other regulatory institutions. First is the M0, CBDC. Then comes the M1, tokenized deposit. Then comes the stable coins. But stable coins still a lot of open question mark because
are they stable?
Are they stable? But I think there is a mixed, still an evolving view that if it's a well-regulated stable coin, do they have any value? I think that's still an open question, but I would not rule them out at this point of time. But definitely, role of private money and all this Bitcoin is nowhere in the picture anymore.
Okay, so we're not going to get into a Bitcoin debate here because
but that could be that. But that is always
that's a debate.
Yeah.
But let's talk about CBDCs.
Yes.
So I think CBDCs on the wholesale side, definitely, I personally think.
Yes.
That there's enough use case. Well, not enough use cases. There are compelling use cases.
Absolutely.
Which should come in. CBDCs in the retail side, or what I actually call programmable fiat.
Yes.
Right.
Yes.
Right. How rapidly do you see the adoption of that coming?
There are three countries which have done implementation in some scale pilot. One is China.
Yep.
Other is India and Singapore. Singapore has last year at the festival, we launched something called Project Orchid.
That's the one I want to talk about.
Which is a programmable purpose-bound money.
Yeah.
Which is in a simpler way that the money is wrapped with a programmable structure when you can program the money for a particular use case where money can be used. Now, if you look at India and China example, they're experimenting on the retail CBDC now as we speak. And I think that makes sense for a large country with a wide range of distribution challenges. In some countries, there are challenges of nodes. Can this be a good M0 replacement? Absolutely, why not? Some country may have a compelling use for retail CBDC. Country like Singapore, which is well banked, we have a very efficient payment system. That could be a small use case, especially purpose-bound money, which can play a role there.
Yeah.
And it can have its own.
I think during COVID, it would have been incredibly useful if that was the case.
Can be useful there. So I think, broadly speaking, CBDC is now getting strongly anchored in the mainstream discussion. I must give a lot of credit to the Bank for International Settlement, the innovation hub they've created around the world. You pick any hub, whether it is Project Dunbar or Project Mariana, Project Guardian, MAS runs the whole sort of project which is driving that whole infrastructure upgrade using CBDC is a very healthy trend. And Augustine Carson just spoke about unified public ledger, another new thinking on top of this whole distributed infrastructure. So clearly that direction is out there. Again, I must say we must thank the crypto industry to show at least directionally where to go.
So all those guys are not going to make it, right?
But that's true. You look at if you look at history, the .com bust.
Yeah, I agree.
What happened there? All the speculative activity went bust. But what they left is an infrastructure where you had Amazon and other coming out. So there will be this moment of history where the first bunch of innovators who had something great in their mind will leave infrastructure in place for a future innovator to make sense out of it and build something useful. Yeah. We are going through the same phase now.
So on private currencies, I'll be honest, we don't have the time. There are too many opinions out there. I myself don't have a formed opinion. I do think some of them do have a place in a particular manner or the other, whether it's a currency or not, maybe proof of value, maybe it finds itself a place in it. I don't think we'll resolve. So I think for all the listeners here, it's very, very clear to hear what, MAS stands for. And I think it's very interesting. My last question of the day, and I'm conscious. I saw a photograph earlier today on LinkedIn, posted by you with the Burj Khalifa at the back, which said 3 areas of potential collaboration, right? And I assume that's 3 areas of potential collaboration between Singapore and the UAE, right? Or Dubai, right? Talk to us a little bit about it. You had digital assets, you had market efficiency to instant, and then you had SME digital financing.
Yes.
We'll take the 2 because I don't think we'll have time for 3. I'm keen to hear digital assets, and I'm very, very keen to hear SME digital financing.
I think let's go to the second one first, because we believe Dubai particularly can play a huge role in the whole cross-border SME interaction, because being a financial center here, and there's a huge market like Africa out there and Europe other side, you can play a huge role in being a creative, a very trusted node when you do global supply chain SME financing. I think that's something very clear to us. So Middle East, Dubai definitely play a huge role. In terms of digital asset, why I think a typical...
But how could they collaborate with you? So
for us, for example, when you move goods, it goes through different hubs.
Sure.
And I think being a financial center, you do play a role financing all this trade. So if you are collaborating on a platform, like for example, in this context, I was talking about Proxtera, where there's a platform which MAS has championed. You can participate as a financer. You can participate as a supply chain player to maintain trust of that whole supply chain system. So many ways you can participate in this whole global finance linked to the global supply chain. So that's where we are looking at Dubai in particular as a possible great partner there. In terms of digital asset, to my earlier statement that if we are going to reimagine financial sector, if we want to build a cross-border infrastructure where you can tokenize the assets, I think every financial center of size has to play a solid role.
Agreed.
And I'm sure Dubai is thinking about digital asset in that progressive future construct. And if there's a strong base here, it also brings credence to the whole market, whether in Asia or Middle East or Europe. And Middle East itself, by its own right, is a huge financial center. So if you pick up digital asset as a key strategic focus area,
which Dubai has,
and then definitely it connects us in a more stronger way. So that's where I made the digital asset comment, and I think Dubai is looking very progressive in that space.
And you've had a good trip?
I had a good trip. I had a lot of good people to talk to. And every time I come to Middle East, my understanding of this place just improves dramatically. And my appreciation of what role you guys are playing is
no, I think it is one of the most, it's one of the most transformative places in the world. And I don't only talk about Dubai, Abu Dhabi,
Middle East and broadly.
What's going on in the Kingdom of Saudi Arabia right now is incredibly impressive.
Saudi Arabia is doing fabulous work in space, and they're really pushing.
Are you going next there, or is that
I'm
a
looking
different
to
trip?
go. I'm looking to go to Saudi Arabia and talk to them. But they're doing fabulous job, and also global talent also has moved a lot. And Dubai seems to be filled with a lot of good people and good talent. So I'm looking forward to a lot of good.
And it's a pleasure on behalf of Dubai. I welcome you to Dubai whenever you come back again. But it's been a pleasure to have you. So I know I've overrun. I know you have timekeepers sitting in this room who are looking at me, staring at me, and pointing at the direction of their watches. But thank you for coming in. I hope to see you again soon, but this time in Singapore.
No, Kigali.
Kigali, sorry. It's Kigali. Kigali is June. Yes.
Yeah, Kigali.
Done.
Then you come to Singapore, and we will bring all the good things you are doing in Middle East to the Asian market and to Africa.
No, that's awesome.
Thank
Very
you.
kind of you. Thanks a lot. I must fist bump you for that.
Thank you.
Right, it was a pleasure. So everybody, that was SOPS, or Sopnendu Mohanty, who is the Chief FinTech Officer of the Monetary Authority of Singapore, which is the Central Bank of Singapore. This was, again, as I said, all put together in less than 24 hours. Very kind of him to actually take out an hour of his day to come and spend it with me. So with that, goodbye until next week.